You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on MishTalk.com. Welcome to our Easter edition, Mike.
Hey, happy Easter. Are the eggs being laid in Vancouver as we talk?
Real estate eggs in the order of $8 or $9 million for a shack.
Yeah, I saw a report out today. What was China literally owns something like a third of Vancouver now? Is that what I'm hearing? Is that accurate?
Well, a lot of people are disputing those figures, but it's all anecdotal. Where you see a house listed for $2.5 million, sold for $6 million, and there's nobody in the house.
Well, that would indicate that someone doesn't live there, and of course, when we look at some of these shacks, why would anyone want to? Well,
obviously, they plan to tear them down and build something better, or maybe just leave it vacant and wait for prices to go even higher. Now, for people playing this real estate speculation game, are they in for a big disappointment in the long run?
Well, you know the answer to that. So, like I said, you know the answer to that. So anyway, we'll see. Meanwhile, all hell's broken loose in Europe again. We had that very, very unfortunate incident. Actually, two of them in Brussels killed. I don't know, the reports vary. Somewhere between 30 and 36 people, with hundreds more injured. And in the wake of that, Poland has said, you know what, we're not going to take any more refugees. I think other countries are going to follow suit with that announcement. So this is going to mark the end of Merkel's relocation shift plan, which, literally we all knew was going to die anyway.
What's going to happen to those 2 million people trapped in Turkey?
That's a good question. It'll be interesting to see if and when they finally start this plan. But so far, out of hundreds of thousands of people that they claimed that they were going to move, they've moved something like 600. And they were, that's how wildly off the figures have been. So, we'll see. Meanwhile, back in the U.S., the data has ranged from very bad to merely muddle through or mediocre. Atlanta Fed President Lockhart came out on the 21st, and he said that there was sufficient momentum in the U.S. economy for hikes as soon as April. Well, I went out there and I looked at the sufficient momentum, and it's been all downhill since he made his statement, and in fact it had started going downhill before that. I strongly speculate what happened is there was a Richmond Fed report that came out the very next day, and in that report, activity in the Richmond Fed region soared, and I think he had an inside tip that was going to strengthen, and he suspected that it was going to carry over into all the other reports that were going to come out that followed, but it didn't. Existing home sales report was miserable. The numbers out today on durable goods were miserable. The new home sales report was just mediocre, but on the basis of those things, the Atlanta Fed lowered its model for interest rates for the first quarter, lowered its model for GDP for the first quarter to come in at 1.4%, down from 1.9. are they really going to hike into this when the fourth quarter was 1%? So that's the momentum we're talking about here. GDP growth has slowed from 2% down to 1%, and the momentum is all negative. And these guys really think they're going to hike. We'll see. I think we're in recession, and I'm sticking with that. BlackRock
says no U.S. recession.
Well, we'll see who's right. That's all I can say. We'll see who's right.
Mish, oil prices have enjoyed a pretty good run the last few weeks, but is it sustainable at around $40?
I don't know. I'm not as quick as others to say that we're going to head back down. It would seem like we should. There's certainly an inventory build. My caution is these things always seem to go way more, way longer in both directions than anyone thinks. No one thought that oil was going to, very few people thought that oil was going to fall below $30. It did, and then when it got there, people started looking at 20. So now it's back up to 40. So the U.S. dollar's weakening a little bit, not enough for it to impact oil as much as it's risen. But, Iran has come out and, Saudi Arabia has come out and talking about cutbacks here. If we really see some cutbacks, who knows? So, I don't know. I think oil was probably a buy in the high 20s, early 30s. I don't know if it is now, but I don't know if it isn't.
Right. If the Saudis did decide to cut production, how fast would that happen?
And that's another good thing. And the other question is, how fast would Russia and Iran step up production in the wake of cutbacks, saying, guess what? This gives us an opportunity to produce more. So that's what we don't know. It would require cooperation across the board, and that's the type of cooperation we've not seen for years.
Well, these guys can't even agree on where to go for breakfast when they meet.
Well, that's pretty much true. That's the state of the cartel these days. There's a lot of individual interests that are just unable to get together or agree to do anything. And of course, there's a massive amount of infighting over other issues between Saudi Arabia and Iran that makes such deals very, very difficult to sustain. Throw Russia into the mix and Venezuela, which is desperate to have oil income come back up to help its hyperinflation situation there, and you just see why there's very little cooperation.
Europe's experiment with negative interest rates has seen major insurance companies like Lloyd's declare a crisis. They suffered a record loss. Their banks are in trouble because nobody's paying interest now. And pensioners, of course, get no money on their savings. Is this negative interest rate thing a good idea?
Well, we knew that before they started, and we knew some of these problems would happen. And the insurance industry has been hit really hard, probably one of the hardest things. And it started immediately. Actually, insurance companies never really enjoyed some of the rebound as other sectors did. But with all the negative interest rates, with all the more manipulations, gold has caught a bid here, and it's risen, and gold miners even more so. Some of the miners are up. Actually, some of them are up over 100%, but that's the junior ones. But even something like Newmont or Goldcorp, I mean, Goldcorp was under $10, and it got as high as 17, I think here. It's fallen back a little bit. Gold sold off the last couple of days, but the trend in precious metals certainly seems up here.
We'll have more with Mish Shedlock right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Mish Shedlock. Mish, biotechs were the darling of the stock market not all that long ago. What's happening with biotech now?
Well, I just look at earnings. There aren't any. It was all speculation, based on some products some of these companies were supposed to have. Biotechs are one of those things that just periodically go into these massive bubbles and then massive collapses. It's almost like clockwork. Maybe I'll try and participate in the next bubble. But it's tough because you never know when these darlings come into favor, and timing on getting out. If I ever did play one of these things, I'm sure I'd be in early and out way too early, based on the track record of these plunges in biotechs. But essentially, these are speculative plays that come in and out of favor. Why they're out of favor here now, it's hard to say. But one of the recent darlings, where some prominent hedge funds had really loaded up on one of these things, stock is down 75-80% or something from the top. So there's some big-time players playing these, and lately they've been on the wrong side of it. Is
that always the danger when you start to play the flavors of the day?
That's always a danger when you start to play play. Yes, exactly what you said.
What about the FANGs? What? Facebook, Apple, Netflix, Google.
FANGs. Well, they remain, overvalued. The Amazon, a PE, does it even have one? When it does have one, it's usually around 900 or 800 or something. So, these things here are preposterous for the head of themselves, and of course, all the entire Russell is. I've been following the Russell this year a little bit, as the earnings estimates have come in. It started with a PE of something like 400 or 500 or something, and then as more earnings estimate came in, it went up to 600, and then went up to 900. And the last one of these things, the Wall Street Journal, which puts out this report, put a little asterisk there and said that it would now be negative, as in, the aggregate stock in the Russell 2000 actually has negative earnings. So the PE, it's either infinity or negative, depends on how you want to calculate this thing.
Is there anything beyond gold bullion and gold stocks that's hot right now?
Well,
or a good
actually,
idea?
That's a good question. I'm trying to think. I'm sure there's some individual issues. Energy has been doing very well. Outside of gold and energy and a little bit of rebound in commodities, I don't think so, actually. So it's the pain trade for most investors would probably be if there are no hiding spots. The U.S. dollar's come off a little bit, so all of the things, darlings that people have been playing, are starting to decline, and those things that have been out of favor for a really long time, like commodities, but especially gold and silver, have really taken off here. The pain trade would be if that pattern continued.
What's the outlook for China? I know they predict 6.9%, and I'm sure a year from now they'll say they had 6.9%, but is that realistic?
Well, they'll probably say they had 6.7% or something. They've had a tendency recently to just miss these things, proving, as if they want to prove. well, we don't always hit our target or whatever they're trying to prove. But meanwhile, realistically speaking, I would expect that, China has GDP growth now of maybe 1 or 2%, if that. So I don't put any stock in those kinds of numbers, and I don't believe they're accurate. And I think that's, partly explains a lot of the things that's going on. And if we can throw one more thing into the mix, the Japanese bond market is truly broken here. It's got close to 600 trillion, in yen of negative trading bonds, and it's on its way to a quadrillion, which is 1,000 trillion in negative trading bonds. I mean, these are numbers that are impossible to fathom, really, nearly impossible to fathom. And Japan, at the same time, not only has negative interest rates on most of those bonds, but it has another. Its yield curve is inverted all the way from 3 months out to 8 years. An amazing thing. So, and it's also inverted from 30 years to 40 years, and by inverted, I mean long-term bonds are trading with less yield than short-term bonds, and here we are talking about yields all the way out to 10 years that are negative, and increasingly negative as one goes out the curve compared to 3 months. Totally absurd situation, yet here it is.
I mean, people are buying negative bonds. Why would they do that?
That's a good question. Actually, the central bank is as part of its quantitative easing effort is actually purchasing these bonds, for its own portfolio, and traders are reluctant to give them up, I presume, because they think the yields are even going to go more negative, and the central bank will eventually take them off their hands. That's the only thing I can figure out.
Well, I did hear that in Japan, when they announced negative interest rates, people ran out and bought home safes until they ran out of home safes to buy.
Yes, that is correct. The consumers, went out there. Now, the rate we're talking about, negative 0.1% or something, the cost of these safes were $600. It would take a long time for someone to recoup their interest simply on lost interest. But there's other reasons too for people to have safes, and one of them is the $3 or whatever it is in Japan ATM fee to use that ATM. So people are tired of paying these fees. They're tired of negative interest rates. So they said, you know what? We're just going to stash our cash in safes. And at $3 a click, if someone was going several times a month to the ATM, they are going to pay back the price of that safe eventually. Maybe not one of those expensive $600 ones, but maybe a $100 or $200 safe. They can pay that off in a matter of a couple of years, I guess.
And with Japan's very low crime rate, people aren't worried so much about someone breaking into their house or doing a home invasion to find out where that safe is and crack it.
That's another good point too. Yes, having a safe in Japan and having someone in the U.S. know that you have one are kind of different things.
Mish, anything else you wanted to tell us to wrap up the week?
No, that's it. And just a bit of condolences and thoughts and best wishes here to anyone who suffered in these idiotic attacks in Brussels this past week. And let's also hope that Merkel comes to grips and comes up with a real solution rather than saying, let's keep on taking these migrants in. I think we're going to see a change in attitude of governments in Europe in response to this crisis. It's a sad thing that we had this crisis, but this is also going to open some eyes here, Jim, about the real risks associated with these open door refugee welcome programs that we've seen.
Mish, have a good long weekend.
You too, and happy Easter to you.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis on MishTalk.com. You're listening to HowStreet.com radio. Find us on Twitter on Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.